Good morning, welcome to IG's early morning call. It's the 22nd anniversary of the September 11th events in New York. Memories out there to those that lost lives and the families of those concerned. Let's take a look at what's happening in terms of some of the headlines on this Monday morning. The yen is up. The Bank of Japan Governor, Mr. Ueda, reviving hopes to move away from negative rates. Dollar's very much in focus as well after hitting a 6-month high last week. Greenback loses ground ahead of the US inflation data out today. Also taking a look at what's happening for the yuan today amongst the headlines coming through from the People's Bank of China, suggesting there's been a stronger fix today, indicating the Chinese authorities' willingness to try and defend the yuan. And in amongst the headlines today, expected to develop, we've got earnings out after the bell this evening from all session stock. Oracle on its fiscal first quarter numbers for 2024. We are expecting to see a rise on demand for its cloud services business. Let's take a look at volatility, down for a second day in a row. The market's showing a drop to 1569, which means that money is going into risk assets. And on Friday, you can see actually the London markets are one of the best areas to place of the world to be. London was an outperformer after a broadly tepid trading session amongst many of the other European markets. There was a boost from consumer and retailing stocks. JD Sports and Next are among the consumer-orientated shares to help the FTSE after the high street brands received positive broker notes. And the market's building on that at the moment. You can see now another push higher for the FTSE, and we're now trading above the 7,500 level again. German DAX, not quite as strong. In fact, there was what looked like to be a bottoming out on Friday. We've got a stronger start to the trading day today. Concerns about the outlook for economic data continue to dog the markets, and Germany is in amongst the economies to use a phrase, in most trouble. The French market's looking a little bit more buoyant. And indeed, you can see us bounce off the 200-day moving average of the French CAC 40. And indeed, we got clear air between where we were at the high point on Friday and where we are now at 72.68. So a good start expected pretty much across the European equity markets. Overnight in Asia, Alibaba down over 3% in Hong Kong after it was announced that former chief executive Daniel Zhang will step down from its cloud business in a surprise move just 2 months after the company said he would leave his role as group chief executive and chairman to focus on the cloud unit. The Hang Seng stock index in amongst the worst performing markets in the session in today's trade. Alibaba, as I say, down over 3%. One of the stocks to watch at the start of today's US session. All sessions, it'll start at 9 o'clock this morning. Nikkei 225 suffering a little bit from what was a good day for the Japanese yen, as we see the dollar pull back on a number of factors affecting the markets. S&P ASX more representative of other Asia-Pacific markets and Asia markets overnight with gains there. The S&P ASX 200, we saw gains in Singapore, I think, as well. Also gains in the Indian markets as well, just to show you that there was a move, a groundswell of positivity amongst some of those markets. Just want to show you what's happening with Alibaba. Saying that stock is down 3%. That's the move, just to show you what's been happening in Hong Kong today. Expecting to see that move lower on the US all session stock when trade gets underway. That is trades under the ticker BABA. There's the trade on the all sessions US stock market. So we'll see that open at 9 o'clock this morning when the trade gets underway. One other headline coming through from SoftBank, up almost 3% on a Bloomberg report that suggests that there is a better than expected reception for its IPO listing. ARM Holdings, or ARM Group, will hit the NASDAQ sometime in the not too distant future. It's filed for that IPO at between $47 to $51 a share. Now, that would have valued the company at $54.5 billion. But that was slightly below the 60 to 70 billion range that we've been hoping for, or the markets have been hoping for. But in fact, news out overnight suggests that we're going to see something like around between a 5 and 6 times oversubscription for these shares. And SoftBank is thinking about raising the price of its IPO. So that was one positive area of the markets, despite the fact we saw the Nikkei 225 on the way down. And I'll take a look in some more detail about this. Just want to show you the Nikkei chart, third day in a row of losses. I'll show you more details about this in the context of the foreign exchange markets in just a minute, because that was suffering at the hands of the slightly stronger Japanese yen. Let's take a look at what happened on Friday on Wall Street close. As at the end of the session on the trading day on Friday, we saw gains across the board. The Dow was the strongest, as you can see, that up 0.25%. Also seeing gains for growth stocks as well. I want to show you what's happening with the Dow because we've got this long-term support very much in place, and that remains the area of support. If you are long on this, stop goes underneath around about the 34,190, 34,200 level. We're currently trading at 34,658 on what looks like another strong start to the trading day today. You can see we're pretty much at the top of the candle, the 24-hour market. It's indicating that we could well see a stronger start. And it's the same sort of price action we got there, albeit a small candle. Nonetheless, the Nasdaq is on the way up, looking for a stronger start there as well as we look ahead to what's happening on the markets. Just wanted to go back to take a look at what's been happening on this yen trade, because I'd say this was steering trade in the Japanese Nikkei 225 today. Relatively strong move down for the dollar against that stronger Japanese yen. The Bank of Japan Governor Kazuo got the market excited this morning, fueling hopes that Japan could soon move away from negative rates. Mr. Ueda told the Yomiuri newspaper that by year-end, the Bank of Japan could have enough data to determine whether it can end negative interest rates. It wasn't just against the US dollar that the Japanese yen was on the move. It's against a whole basket of currencies. You can see here against the euro, we're at the lowest there for the euro against that slightly stronger Japanese yen since the 8th of August. A welcome boost as the Japanese currency has recently come under a lot of pressure. And you can see here building its position against the euro, but also against, the euro building its position against that weaker Japanese yen up to these levels up here. And it was beginning to be obvious that the Japanese authorities would have to come in with some sort of either intervention or positive news, as we've got this morning. When we've seen this announcement giving a little bit of strength to the Japanese yen. But as I said, it's across the board. If you dial in pretty much any other currency against the Japanese yen, you can see that we've got lost ground. This is sterling down at levels they're not seen since the 10th of August against that slightly stronger Japanese currency. Let's stay on the currency markets and stay on the charts, because I want to show you what's going on with the Chinese yuan, because this is another story that's beginning to develop nicely for some positivity for the local currencies. This is the dollar down against the Chinese yuan at 730.61. In China, they've come out in defense of the yuan by delivering a strong verbal warning after some forceful guidance with its daily reference rate, a move that's brought the currency back from these 16-year lows. Now, we saw that 16-year low, you can see here, hit back on the 24th of October last year at 737.80. And as it got towards that, we saw the central bank come out in China. The People's Bank of China said it will take action to correct one-sided moves in the market, that it calls them, whenever it's needed. And they're confident, the central bank's confident in keeping the yuan basically stable. The yuan fixing was stronger than expected today from the PBOC. European Central Bank's due to decide on its latest interest rate decision come Thursday this week. The outcome is reported as resting on a knife edge, having already raised its main refi rate from its 0% last summer to 4.25% at its last meeting, which was back in July. It's beaten the biggest surge in inflation for a generation. Or has it done enough to curb inflation? This is the big quandary that's producing that knife edge there at the moment. Let's take a look in some more detail about what's going on here. Doubts over whether the central bank will raise rates for the 10th consecutive time have intensified amid widespread signs of an impending economic downturn, including weaker business confidence and falling German industrial production. But this would be outside the main remit, of course, for the ECB, which is to keep a lid on inflation. It does have that target of on or around 2%. Derivatives markets are pricing only around about a 35% chance of the ECB raising interest rates come Thursday. The refinancing rate is expected there to remain at 4.25%. No change either for the deposit facility rate and marginal lending rate forecast, respectively, at 3.75% and 4.5%. Now, clearly, this is an event which is going potentially to move the euro dollar. Let's take a look at what's happened as we saw the trade get underway today. A little bit of an uplift against that weaker US dollar, currently trading at 107.29. Not completely convinced this is a move which is going to be sustained. As I said, a lot of water still has to pass under the bridge before that decision on Thursday. And I'll be waiting to see just what's happening with that. Of course, the Fed and the Bank of England also due to report on interest rates in the not too distant future. This is the euro trade against sterling. which is the euro down against that slightly stronger sterling in the session in today's trade. Most economists expect the ECB to include a weaker outlook for growth and a slight increase in inflation expectations for this year and next. Now, here in the UK, a few macroeconomic indicators are scheduled throughout the week, starting on Tuesday with the unemployment rates expected to rise to 4.3% in July from 4.2% in the prior month. On Wednesday, we've got monthly GDP numbers. GDP forecast to fall by 0.2% on the previous month, and industrial production expected to decline 0.6% in July month on month. Just returning to that GDP number, remember that June came in far stronger than expected with a rise of 0.5%. So that drop there that you can see on a month basis would only take it back to within the point it was at back in May this year. Let's take a look at what's happening ahead of all this on sterling against the US dollar. Like a lot of currencies, we've got sterling up against that weaker US dollar, 125.14, 200-day moving average holding. We haven't really traded below that since that point back in the March point this year when we were down at 117.32. Last week, sterling hit a 3-month low against the dollar, and that's lifted off from that, as I said, away from that 200-day moving average. Now, let's look at what's happening with the dollar basket, because this remains one of the top stories. In the session at the back end of last week, we saw the highest print we've seen since the 10th of March. There's growing confidence about the US economy, which has been backed up by the US Treasury Secretary, Janet Yellen. Speaking at the G20 meeting in New Delhi over the weekend, she said she's increasingly confident about the US economic performance. She said that the US should be able to contain inflation without major damage to the job market, backing recent data which shows a steady slowdown in inflation and fresh influx of job seekers. This week, there's key inflation data, which is before the Fed decision on Wednesday next week. CPI growth expected to accelerate to 3.6% in August year on year, after a 3.2% rise last month. An increase due to the recent move up in oil prices. Core CPI forecast at 4.3% year on year, after 4.7% in July. On Thursday, retail sales, meanwhile, anticipated to increase by 0.2% in August on a month-on-month basis. And on Friday, industrial production seen falling by 0.5% year on year. And we have the Federal Reserve interest rate decision due on the 20th of September. Now, let's take a look at one other story that is developing today. I want to bring in the restaurant group into the mix this morning for stocks to watch at the beginning of today's session. This is a company which has a lot of business, including Wagamama's. Now, you'll remember perhaps maybe last week we saw the restaurant group come through with numbers which showed that the company was doing well. Wagamama's especially came out for a special reference. And we've seen this market move up at the back end of last week. Today, we've got confirmation that the retail restaurant group is selling its loss-making leisure business, which comprises around 75 trading sites and associated restaurant and management team employees, to the Big Table Group, which is a private equity group. As part of the transaction, TRG will pay cash contribution of £7.5 million to get the business off the balance sheets. The transaction is expected to complete in early Q4 2023. The reason why I brought this chart up, I think, is because I wanted to take a look at this line of resistance. On Friday, we closed just above the 47.5 pence level, taking us beyond the point where we're at back on the 9th of June. Let me go focus in on that, to levels there not seen since the 24th of May. I think this is essentially a good news story, although we did see this break at the back end of last week. The company says the deal announced in full today will significantly accelerate the group's core strategic goals of adjusted EBITDA margin accretion and deleveraging. In other words, there's a potential, I think, potentially to take it up to this high up here at 51.6. That'll be certainly a price target worthy of today's session. You want to put your stop underneath the bottom of Friday's candle, around about the 43 pence level, if you're long on Restaurant Group at the start of today's trading day. Now, last week, we were looking for earnings to come through for the first half from Vistry. Didn't happen, but it has published the numbers out this morning. And a quick scoot through them, it's just typical of house builders at the moment to find they're going tough, but making the most of an opportunity. It's announced this morning it'll merge its affordable housing partnerships business with its house building operations. The announcement made as the group posting an adjusted pre-tax profit of £174 million for the first half, down 8.4% compared with 189.9 million this time last year. Earnings per share down a whopping 38.4%. All this on a revenue increase of 31.4%. We've been talking a lot about the pressures being building on the profit and loss accounts of these house builders because they are trying as much as they possibly can to absorb the extra costs in inflation for house building costs, bricks, copper wiring, cement, the diggers, the cost of getting plant to the site, operating the plant, the staff needed to bring about a house, enormous amounts of skills, and all these costs have gone up. And this is, I think, is one of the reasons as to why we got this big drop in revenue. But as I said, the company taking an opportunity in all this, it does have cash on the balance sheet. It's aiming to return £1 billion to shareholders over the next 3 years from ordinary and special distributions, it says, alongside the elimination of debt, and intends to launch an initial share buyback program of up to £55 million in November this year. So where does the stock go? It would appear on the surface, I think, to be a positive news story, but when you look underneath what's happening with the earnings per share down 38.4% and pre-tax profit down in what is otherwise an upward-facing revenue trajectory, I just don't understand what is going on with house builders. I have in the past shorted them and it's not worked, and they just continue to rise. Now, this where we are at the moment, you can see, in fact, on Friday, we closed above this falling line of resistance. And in fact, the entire candle body, albeit very, very thin, it was a long-legged doji candle on Friday, indicating that it's very difficult to know where the markets are going to go next. 795.8, these earnings out this morning. Interesting to see where this stock moves. Now, if you're long on this, stock goes under here and around about the 762, possibly a bit too far below, maybe too far, maybe 780. Good place your stop if you're long on Vistry at the start of today's session, but I'm not completely convinced. It's a long trade story. We'll have to see how that goes as well. The software giant Oracle is due to report its fiscal first quarter 2024 results after the market closes tonight. Let's take a look at what we're expecting for the business. Analysts are estimating earnings per share at $1.14 on revenues of $12.45 billion, which would represent an increase of 8.8% year over year. Two things to watch: accelerated digital transformation, according to analysts, along with the continuation of the remote work and mainstream adoption of the flexible hybrid work model. It's expected to have driven demand for Oracle cloud infrastructure services. And secondly, investors want to see how the acquisition of Cerner in 2022 has bolstered the company's position in the lucrative healthcare domain. This is an all-session stock on the IG platform, and it is possible to look at shares at the start of the session at 9 o'clock trading day today. Not too far away from record highs in this stock. I want to take a look at the long-term picture for Oracle just to show you what's been happening. I think if I lift this up here to these record highs up here, you can see that we're not too far away from all-time record high at 127.80. The stock will open at 126.36. Larry Ellison continues to lead this business. He founded it back in the 70s. One of the longest serving hands-on CEOs in the global tech world. And he's done a tremendous job in continuing to lead this company to higher highs. And there's no reason why it can't continue. I think if we get some good news out tonight on those two areas I highlighted, then potentially I think we've got the impetus needed to see a break of this high level here established there as a record high back on the 16th of June. Let's just take a look at two other areas of the market. I want to look at what's going on with the price of oil this morning. We're going to look at Brent, which back into last week passed above the $90 a barrel level, and that's where it's trading at the moment, 24 cents above that line. And we see a continuation of interest in the long trade here. It's a little bit of consolidation going on. It's the monthly OPEC report out this week, where we could well see a little bit more sort of flesh on the bone of the recent news that Saudi Arabia and Russia have agreed to continue to see cuts. And this is really behind much of what we've got in terms of this upward move. On Friday, the Baker Hughes rig count rose by 1 to 632. This total count includes oil rigs, gas rigs, and rigs in the Permian Basin. Oil rigs climbing 1 to 513. So far this year, active drilling rigs are down 147. And perhaps more significantly, this latest count is 443 fewer rigs than just before the pandemic, just to put that into some sort of context. There's no context there about how much oil is produced by each individual rig. It's just the rig count itself. And I want to return very quickly to what's happening on the markets, just to take in this move. Gold up And indeed, we're pretty much at the top of the candle. No sellers at 19.28. Gold benefiting from this drop in the US dollar. And that's where I'll leave you as we look ahead to the start of today's trade. Watch out for Vistry at the beginning of the session here in the London markets, beginning of today's trade. Also, the restaurant group, for me, one of the more potential upside trades, possibly at the start of today's session. But if you put anything on the markets, do remember to put your stop losses in place to give you protection should there be a market move against you. We're back at 10:30 with Chart in the Markets.